Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, we hear a lot about neobanks and the dazzling array of services they offer their ballooning band of customers, but in many cases the technologies they use to provide new products comes from third-party technology players. One of the biggest in the space is Europe's Mambu. The company's co-founder and CEO is Eugene Danilkis, who joins me now. Great to see you, Eugene.
Likewise, great to see you. Thanks for having me.
And so tell us more about Mambu.
Sure. So Mambu is a banking software platform. Effectively, our mission really is to empower people, so individuals who work at financial institutions, be they fintechs or large banks or telcos, to create great banking experiences for everyone and anyone around the world. And we do this by basically providing the mission-critical platform for which banks can design and create and service a lot of their financial products, be it personal loans, be it transactional personal accounts, be it business loans, mortgages, and many others. And on top of that platform, they can build their unique user experience, their unique user journeys, and create great banking products and experiences for their end customers around the world.
And of course, over the past 12 to 18 months, everything's gone so much more digital. We've also got banks trying to kind of become super apps. We've got tech companies, also introducing, and telcos introducing, banking products. I'd imagine all of this must have been pretty good for growth at Mambu.
Yeah, absolutely. It's been definitely a very exciting ride probably for the last couple of years, actually. The last 3, 4 years have been really exciting. And of course, COVID, like for every organization internally, made it definitely a challenge to figure out how do we work, how do we change our way of working. But, Mambu has always been a very international, globally distributed company. We have individuals literally from the west coast of the US over to Australia and from Brazil to the UK. So we have people really all over the world. So for us, working virtually ourselves was a challenge that we were able to rise to relatively quickly. But of course, for our customers, you've seen a lot of need for adaptability and agility to adapt to changing customer needs, changing products, or very even operational, especially during the very first couple of waves of COVID, to be able to very quickly adjust even, the payment terms for businesses and individuals where suddenly their businesses grind to a halt. So there was a lot of changes that we saw that were very quick operationally in the first probably 3-6 months of the most intense COVID lockdown of last year. And then very quickly afterwards, a big realization that businesses really need to be much more agile, and that this wave of digital banking is coming much faster, and the transformation needs to be accelerated in general, spurred on, of course, by the situation caused by COVID.
And as things have opened up or started opening up, especially in richer countries, have you noticed any kind of, let's call it post-pandemic slowdown?
No, not so much slowdown. I think like I said, I think especially at the executive level, strategic level, there's a realization that everyone, of course, talked about digital banking and the need for more agility and the need to use more different modern products and technologies to service customers, be it the customer experience or supporting ones such as credit decisioning or payments and so forth. And I think everyone sort of knew that this was coming, of course, over the next decade. But I think a lot of people realized, like I said, the strategic level of these organization, that shift is coming a lot faster than expected, and that they need to be now driving into that and think about how do they design their operations, which technology can they use to support a future that is changing pretty much all the time, and also a future, as we saw with COVID, that is also very uncertain, where you have to be able to be very adaptable. And I think the institutions, the financial institutions that did well, that managed to get through the COVID situation, were the ones that were able to adapt very quickly to either the products or the technology that the customers needed, given, of course, that the whole situation was so incredibly dynamic and unpredictable.
Right, and of course, in the midst of all of this going on, Mambu managed to raise, I think, around $130 million at the start of the year at a valuation of around $2 billion. Is this all for expanding organically? Should we expect acquisitions from Mambu?
Well, as we think about building out a platform, of course, I think over a long-term time frame, of course, we'd be looking for companies that can complement ourselves. I think right now, we've had so much opportunity coming from so many different geographies that's been really about strengthening our both our platform and product, but also our teams and operations in all these different geographies where we're servicing customers. So we expanded our footprints in markets like LATAM, of course, here in EMEA, which has always been our home base, but we also effectively built out a brand new team in North America over that time period. So it's been mostly so far focused on very much, expansion of our customer facing teams, and of course, pretty much nearly a doubling of our whole entire product technology and security organization to support all the customers and all the demand that we see coming in right now.
And did that fundraising change anything? I mean, did it just make you more, give you longer runway to kind of, plan ahead more into the future, or just be more aggressive in your expansion?
Yeah, it allowed us to accelerate some of the elements of our expansion that would have probably taken, at a slow organic pace, might have taken a couple of years to play out, and we were able to squeeze those together and do that in a shorter time frame, and also, quite frankly, react more to some of the demand from the market. There was opportunities from our customers that we were just in a position to fulfill because we didn't have the teams in the right places. So it's also allowing us to actually to upsize our team for already the market demand that we're seeing, and of course also allow us to explore new geographies, new product lines, and new technology that is going to be important investments for us for the next few years.
And I'm pretty sure, Eugene, that you're the first person I've ever spoken with who has a master's in human-computer interactions. Was this just, so that when AIs and robots take over the world, they'll see you as a natural ally? What was the planning behind studying that?
Yeah, it was really just, my own personal, life insurance, so I know how to deal with the robots once they become our inevitable masters. Um, but also, I thought it was always a passion that I had. So initially, I always studied, I was technology, studied computer science. I worked for a few years also for a company that was developing mission critical software for NASA. But I think I always had a passion and an interest for how does technology really manifest itself in terms of how people actually interact with it, and what's the real experience they have, and how do you make a technology that's user friendly. And I think by now I don't mean user friendly in terms of nice and pretty user interfaces like we have on smartphones. It also means a lot of different other users. There's business users, the technology users, and they have an element of how do they interact with technology for the whole entire user journey to create a seamless experience. And I think if you look at what really differentiates great banking experiences, it is actually about that great user journey and that seamless interaction with technology, and using technology in the right parts of the user journey to make that experience seem really smooth, to make it feel seamless, and to also leverage the data that organizations have to support their users to make intelligent decisions. It's no longer, as it was maybe 10, 15 years about just creating pretty user interfaces. It's actually about designing the business user journey in a way that's efficient and effective for the financial institution providing it, but also feels like a great consumer-like, seamless and trustworthy experience for the end customers.
And I guess a seamless customer journey is very important for astronauts as well, because you made a reference to NASA. I think you worked on software that lives on in the International Space Station. What exactly did it do?
So the International Space Station has, of course, different modules provided by different countries, and Canada's contribution to that is this large robotic arm called the Canada Arm, and the Canada Arm was procured by the Canadian government, of course, Canadian Space Agency, but of course developed by private companies. And the company that I was working for, based in Vancouver, was developing both the actual robotics for the arm, but also the control software. So basically, the brains controlling the robotics and also controlling, the actual system that the astronauts use for controlling the arm. So it's effectively, developing some capabilities around controlling the arm and the information and how the arm actually manipulates and moves. So obviously, a very mission critical system, which really translates well actually to the financial industry I'm in as well. Slightly different use case, but the idea of actually engineering systems that in this case we're talking about multi-billion-dollar systems that really have zero room for error. And of course, there's a lot of parallels between that and a banking platform, which also has very little room for error for our customers.
Mambu seems set for a very bright future given its situation and its, finances. What's been your biggest failure today? Perhaps you can share that with us and what lesson you learned.
Yeah, it's a good question. I think the whole entire journey of any company is kind of an up and down, and I think the failures, if you will, are always basically about learning different lessons along the way. And I'm not sure if ours could be considered absolute sort of failure, but I think from a business perspective, when we first launched the business, started to create it, we really assumed and built the business under the assumption that most of our customers would be organizations in emerging markets. And the reason for this was basically this was about 2010 when we started, working on the concept, in 2010 11 when we actually launched the company and the product. But at that time, you didn't really have that much happening in fintech. Most of the Western organizations were not really looking at cloud. There was really no financial institutions looking at the cloud, and we could imagine a future sometime, in the far distant future where that would change. And of course, that was a big premise for it. But at that time, there was not a market available. So we focused very much on building out a team and a company that would focus on emerging markets, where you had a situation where you had, probably close to 3 billion people that were going to come into the formal banking sector. So individuals that didn't have bank accounts, that didn't have loans. And we imagine that next wave of 2-3 billion people would be banked with brand new digital products, with mobile, and would need new technology to service them. And of course, that actually is starting to play out. But we actually assumed there would be a lot of the traditional institutions in those markets that would digitize. And actually, what started to happen is that you start to see, the fintech movement in terms of neos launching in emerging markets, and also, of course, non-bank and providers starting to provide financial services. So you see telcos and others starting to provide those services. So we assumed it would actually be the smaller, mid-sized organizations and the local banks that would start to kind of transform. And we actually didn't expect how quickly these new fintechs or these corporates that can provide financial services as a product would really start to spin up. So we focused on a customer segment that actually probably ended up not being particularly relevant to what ended up playing out, especially in emerging markets. And of course, we anticipated that in the Western world that fintech would come around, but I think we were surprised at just how quickly it went from almost non-existent, really, probably in 2013 to being on top of everyone's minds in 2000, from 14 to 16, and then how quickly the traditional financial institutions, the banks, would need to respond to all of that. I think the pace of that was something that we didn't anticipate happening so quickly, frankly.
Okay. Well, look, Eugene, don't go away because we're going to take a very, very quick break, after which we're going to continue our conversation with Mambu co-founder and CEO Eugene Danilkis. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Eugene, I've just got a couple more questions for you, so let's talk about the fintech ecosystem in general. We've seen banks and fintechs racing to provide more and better services, so it made sense to go to third-party technology providers to help them scale up quickly. Do you see a point at which they decide, you know what, it's actually now better for us to build than to buy? And if that's not the case, why not?
I don't think there's a single kind of answer for that. If you look at the technology stack that's required to provide, a financial product to you as an individual, it's incredibly complex. There's many dozens, hundreds of systems involved that need to work together to provide that. And of course, there's also sometimes maybe some human element to that, depending on the products and service. So I don't think there's a single answer to that. I think what financial institutions are looking at are which products and services can they procure which are best in class and allow them to build their unique propositions on top of that. And for the most part, those unique propositions tend to be more customer facing. So they tend to be more about the actual design, servicing of the actual financial products, about the actual user experience you see around things like pricing, around things like decisioning about which customers to onboard and how to onboard them. And of course, the backend systems are things which they need to have, which are, mission critical, which are working at very high performance and very high quality and very high reliability and extremely flexible. But yet there's no real differentiator for any financial institution to be able to calculate interest better than any other financial institution. It has to work and it has to be highly flexible. And this is very similar to why financial institutions are now moving with accelerated pace to cloud service infrastructure providers, because they can see, of course, that those institutions have built really world-class data centers and world-class services on top of those data centers to the level that it doesn't make sense for any financial institution to try to, at best, copy it, and most likely will always be behind what these organizations who focus on that can do. And that, I think, is very much this whole entire message of composability, composable business models that we see customers interested in, because they're looking at their whole entire stack of technology and services and seeing which pieces of this can I procure from different service providers that are really best at that piece, at that particular piece of the solution. Which ones do I need to build and maintain the intellectual property and create my own unique proposition, and then how do I quickly glue those pieces together to provide the end services, but also in a way that I should be able to switch any of them out in a relatively agile way. So I think that's how modern financial propositions are being built out these days.
Okay, well, unfortunately, we've kind of run out of time. I don't know where the time went. So really just have a moment to thank you, Mambu co-founder and CEO Eugene Danilkis, for joining me today. Thank you.
Yeah, thanks for having me.
And I'll be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.